Hello, and a warm welcome to Getting Your Shit Together, a podcast dedicated to helping you take control of your financial life, be it investments, mortgages, insurance, loans, and more. I'm Jerome, full-time mortgage professional with over a decade of helping clients navigate the complex world of mortgages and real estate.
And I'm Neil, also a mortgage professional, helping clients navigate the complex world of mortgages, real estate. And together we are here to guide you.
We know that managing your finances, securing the right mortgage, and making smart investment decisions can be confusing and overwhelming. That's why we created this podcast, to break down these complex topics into simple, actionable steps.
Each week, we will be diving into essential topics from financial planning to real estate investments and bringing in expert guests as well from various fields. Our guests may include investors, realtors, financial planners, investment specialists, builders, developers, lawyers, trustees, and the whole lot. All of them would be here to provide valuable insights and practical advice.
Our goal is to help you evaluate how you're managing the important aspects of your life, highlight some common mistakes, and offer some corrective measures to get you back on track.
We will also be busting common myths, answering your questions, and providing real takeaways that you can implement immediately. This isn't just another boring podcast. We are here to make sure you're engaged, informed, and entertained.
So join us on our journey to get your shit together and help make smarter financial decisions. Tune in for actionable advice, expert insights, and engaging discussions that will empower you to take control of your financial future.
Thank you for tuning in to Getting Your Shit Together. Let's get started. So, for the first topic of this episode, let's discuss about the housing statistics which are released by TREB, or the Toronto Regional Real Estate Board, for the month of July. Some of the key highlights from that report were quite interesting. Firstly, there was an increase in the real estate activity as compared to July 2023, that's a year ago, which is a positive sign. It means homeowners and prospective home buyers are finding opportunities to create to do a transaction. Secondly, the MLS Composite Price Index, or in simpler terms, a reflection of the price for an average property with standard features, came down by approximately 5% as compared to July 2023. This is again good news for prospective home owners and buyers. As an extension to that, the household income required to buy a similar property within GTA also dipped below 200,000, even when having a down payment of less than 20%. This all was enabled by prices which decrease in majority of the locations, with price increases seen only in 52 of some 292 location and property type combinations, which are featured in the report by TREB. We are definitely also in a buyer's market because sales to new listing ratios is under 50% in most locations, thereby indicating a balanced and possibly buyer's market in most areas. All in all, it looked like a good time for prospective home buyers. Maybe not so good for existing home owners who are looking to sell, but I think it is good overall for the health of the market.
So you just gave a lot of information there, Neil. What do you think some of the causes of the changes are?
Again, it's not always very clear, but based on the reflection that I have done, I think it's because of the softer economy. People are stretched and anticipate to be maybe in a tighter financial condition going forward, and so there isn't much appetite to make a big purchase. Interest rates are definitely high, and it is making qualification to purchase or refinance tougher, though the situation has improved lately. And maybe memories are still fresh, and buyers do not want to repeat the mistakes of recent years. And I guess that is what is keeping the activity in the real estate market low, and prices definitely are not rising.
That makes a lot of sense. Does that mean that it might be more affordable in certain areas of the locations that we've been tracking?
Most definitely. By my calculation, affordability has improved by up to 5% just comparing against June 2024. That's like 2 months before. Given a combination of not only decrease in prices, but also decrease in interest rates. When both of these factors play in your favor, of course, affordability increases.
So, from the grand scope of home buyers, who do you think that this will impact the most?
Based on the data, it seems like the improvement in affordability is obviously highest in the detached or the single home segment. But there are, of course, more buyers in the townhouse and the condo segments. So thereby, improvement has been not so much in those areas or those property types. But generally, I would say if somebody has the ways and means, or if somebody is looking to upgrade, this might be a great time to get into a detached or single family home.
So, if somebody was looking for an approval or a pre approval, or they want to figure out how much they can afford, who would be the best person to call?
Of course, they should reach out to a trusted mortgage professional. Reaching out to brokers would definitely give them tremendous choice in terms of what they could qualify across lenders. And again, given that qualification is happening at a rate higher than the Canadian benchmark rate, there is variability in affordability or the mortgage eligibility across lenders. So going to your bank may not be giving you the best option in terms of what you are eligible for.
Here's our episode 2 audience question for the first topic. So, what do you think? Is this a good time to purchase your new home? So, our second topic for today's episode is guidance on buying your first home. When you're ready to buy your first or even your next home, there are many decisions that need to be made to start the process, like what realtor to use. Do you speak with your bank about the financing first, or a mortgage broker? Real estate lawyers, home insurance people. What do you recommend, Neil, when you're looking for a realtor?
When looking for realtors, my preference is to go with somebody who is a bit more knowledgeable about the area. So this means that maybe I will have to do some sort of analysis beforehand in terms of which area I'm looking to buy in if I'm unsure. So once I've sort of decided on that aspect, I look for realtors who are aware of those areas, the bylaws in those areas, because it can make a difference in terms of the property that you purchase and what you can do with it. Additionally, I also look for realtors who have a communication style which gels with me. They are available to speak with me, are keen to understand what my requirements are, so that they can look for appropriate properties. So all in all, I would say work with somebody that you feel you're comfortable with and who understands and responds to your requirements.
Perfect. Thanks, Neil. Next, you're going to need some documents to get started. Typical items like an employment letter, pay stub, and T4s. But, Neil, what other documents would be required to provide some options for financing?
Absolutely. Income documents for sure is one of the basic requirement when getting a mortgage. Some of the other categories of documents could relate to identity, proof of identification. So make sure that you have a couple of documents that it can be presented. It could be your driver's license, Canadian passport, PR card if you're a permanent resident, and maybe even you could use some non-picture ID forms of identification. I think one form of identification which cannot be used is health card. So make sure that you have at least 2 other forms that can be used. Yeah. When it comes to income itself, I would say you covered the basic set of documents like the employment letter, pay stubs, and T4s. And then those are applicable for salaried or or people who are getting an hourly wage. If you are self-employed, expect to have different kinds of documents like bank statements available in order to prove your income. So I would say those are kind of two big items, apart from, of course, down payment.
So if you're business for self or self-employed, and you own a corporation, there are some extra documents that you would need as well, like the articles of incorporation. We would then also likely need your full T1 generals showing the amount of income that you pay and how you pay yourself, as well as the notice of assessments that come from CRA showing that you don't owe any taxes to the government, because we all know the government takes precedence over everybody, and we need to make sure that those things are already looked after.
Absolutely, yeah. And the documentation requirements can be a bit more cumbersome when somebody is self-employed. And again, different lenders look for different things. So maybe your bank is going to ask for your T1 generals and NOA, but some other lender might ask for business bank statements for the last 12 months. So be prepared to provide these and keep it handy, depending on what your situation might involve.
Yeah, yeah. And can't forget down payment. And if you own any properties, extra mortgage statements, property tax statements on those properties, as well as the lease agreements.
Oh, yes. And again, bank statements showing those rent deposits for the last couple.
Yeah. What about debts?
Again, an interesting area. And again, something to note is debt obviously plays a key part in determining, or existing debts play a key part in determining how much of a mortgage one could be eligible for. And the nature of the debt also makes a difference. For example, even if you have, say, $100 on a credit card versus a line of credit or a secured line of credit, those are looked at very differently by lenders. It might appear as the same to you, but from their perspective, the debt serviceability is different. So I would say, if you are carrying existing debts, it's best to work with somebody who is knowledgeable, like a mortgage professional, mortgage broker, who can advise you in terms of how best to structure or restructure that, and so that you are able to optimize on your mortgage solutions available to you.
You mentioned restructure debt. Does that mean like getting a debt consolidation loan, or is there something else that you're thinking?
There are different things that could be available depending on what your situation is. I've seen instances where maybe somebody is a bit short on down payment, but if they're not carrying any other debts, maybe they are able to borrow the down payment instead of seeking a gift from parents or close relations. So these are the kind of aspects that somebody who is knowledgeable about the lender's underwriting criteria, your situation, may be able to work out a solution which is unique.
Yes. Just recently, I looked at a file where the client had a car loan payment that was really high. And because it was a fixed installment loan, there wasn't a whole lot that we could do with it. But we were able to use a line of credit to pay that out. And then the calculation on the line of credit is done differently. So it actually lowered the overall payment and impact on qualifying. So that's just one of the unique and special ways that, as Neil mentioned, that we can restructure some debts in order to get you more property, more mortgage, and get you into the home that you're looking for.
Absolutely. And there are more than one ways to tackle this. So Jerome mentioned about getting a different kind of loan to address the situation about the car loan. We could also be working with other professionals, like professionals working with auto financing, to see as to what opportunities are there to restructure your existing loans. So various ways to address this matter. It depends on the person they're speaking with.
Perfect. You going to tell us about the second audience question, Neil?
Oh, yes. So the question is, if you're looking to buy a home, how far ahead of the purchase would you start preparing?
So that wraps our second episode of Getting Your Shit Together. We hope you found some of these updates and our discussion useful. Don't forget to subscribe to the podcast, share your comments below, and share the podcast as well, and follow us for more insights in upcoming episodes.
Of course, and if you have any questions or topics that you would like us to cover, let us know, and we'll ensure those are addressed in upcoming episodes of Getting Your Shit Together.